Hi guys, welcome back. So Monday morning, I thought that so far the market has been very volatile because of the big tech's earning, and now they're mostly out. So it should go back to the story of the interest rate and yield curve. And right now I see the market sending out a lot of mixed signals. Like the 10-year yield curve is breaking out, making new high. So it should create some pressure for the tech stocks, but recently it's not having a lot of correlation. And then during the weekend, there was a news from Bloomberg titled with Russia invades Ukraine. So that looked very, very scary at first, right? But then after a while, they already deleted it and apologized for accidentally publishing a story that is not true. How could they make such a mistake, right? It's because they had this headline prepared. They got ready in advance in case it happens so they can push this story right away. But just this mistake is enough to freak out a lot of investors because it seems like the world is already preparing for war, preparing for the worst, right? So for this, I keep monitoring the US dollar index. But recently, it seems like the US dollar is formed a top and has been dropping quite a lot. If there is really war going on, the US dollar should spike because of fears. Usually when there is fear in the world, capital tend to flow back to the US market for safety. This is why the US dollar would go up. Similar with 2020, at the beginning of the pandemic, the dollar spiked all the way up to almost 103. So if there is really war going on, we should also see a quick spike of dollar. On the other hand, the crude oil price just keeps climbing, and it does seem like the potential war going on is sending the oil price higher and higher. And so the inflation higher and higher. And now a lot of people are waiting for the CPI data reported on Thursday, the day after tomorrow at 8:30 a.m., so pre-market. And this data would lead to more prediction on how the Fed would increase the rates further on. So much going on. I said on Monday morning, I see the market this week moving sideways until the CPI number reported on Thursday to choose a direction. And as you see, the market has been mostly moving on the side up and down for a few days already, just waiting. I think everyone is kind of guessing what's going to happen after, waiting for the market to choose a direction. And in this case, when the market is somewhat stabilized, it might create some rebound opportunity for some growth stocks. Because last week we saw the index running up quite a bit, but a lot of growth stocks were still lying down on the floor. So if the index is just going sideways right now, then it might in fact create some opportunity for the growth stocks that have not rebounded with the market last week. Kind of a catch-up rebound. For example, some of the crypto-related stocks like Coinbase, ticker symbol COIN, last week when the index rebounded strongly, it was mostly doing the sideways. So now the index is moving on the side, it can catch up some rebound. It might keep going. So if you are looking for trading opportunities, maybe it's okay to give it a try for just a few days. Until the week is over, the CPI number is out. If we are all trying to guess what's going to happen after that, so I might as well try to guess. Now, since we have important number reporting on Thursday and the VIX or the UVXY is still continue to go down, even though yesterday the market was slightly down, but UVXY were also down at the same time. So this is showing the market is not that afraid, so leaning towards a bit bullish. The Hang Seng Index in these few days also has been showing strength after the new year. After the holiday, it seems like the institutions are back to work buying again, so seems like not afraid of the what's coming up, huh? And judging from the dollar being in a short-term downtrend, short-term, only because in the long term, I think it's still trending up a little. So in this case, I would say maybe the CPI number would be bad as usual, but somewhat has been priced in for the stock market already. So maybe it would still have a little rebound after the CPI report. But I would look closely whether if it's a false breakout or not. Recently, because the market has been rebounding quite a lot, very strong momentum, so a lot of people and a lot of YouTubers have been saying it's a V-shaped recovery. And you see a lot of the big institutions suggesting to buy the dip. What I read the most is from Goldman Sachs. And the reason is because the VIX is dropping and also had peaked 2 weeks ago at 33. Right now on a downtrend. And a lot of the big techs, the FANG stocks, FAANG, and many companies in the S&P 500, they can start to buy back shares from the beginning of February. So last week, most of the companies can start to buy back shares again. So that would be the cost to drive up the share price and the stock market. As we know, a lot of the FANG companies still holding substantial amount of cash on hand that can buy back and pull up their share price because they don't have a lot in R&D expense, so they would mostly use it on the share buyback to pay back the shareholders. That was one of the main reasons why they have been running up throughout last year. So the institutions think that it would be one of the major causes for the index to pull up and have a V-shaped recovery. And also a lot of cash are waiting on the sideline to buy the dip once the market shows reversal. And I may add that even after a few days of rebound, near 2 weeks, the fear and greed index is still at fear level. It means most investors don't trust the stock market now. So even if the institutions want to create a bull trap, how can it be if the fear level is still so fearful? Another signal is the Bitcoin has been rebounding pretty strong in just a matter of 2 weeks. Ran from 33,000 to the high of 45,000, so near 40% run up. That is very strong and fast. If Bitcoin is up, it does show the market is turning a bit risk on again after the whole January of being risk off. So does that mean we have seen the market bottom and are we going to see a V-shaped recovery? Does that mean we should buy back our long-term positions? For me personally, I'm still not convinced that this is a full reversal. I'll tell you what are the circumstances for me to treat this as a reversal, right? I think the first requirement is for the S&P to close above the 30 MA this week and next week. So if it can close above 4538 for more than 2 weeks, so this week and next week, above this level, then I would start to believe that it might be a reversal instead of a rebound. And in this case, if it happens, we would also see UVXY making an all-time low, below 11. So until that happens, I'm still gonna treat this as a rebound and speculate that it's going to be a second leg. Whether it's a double bottom or second leg down, we don't know yet. But I still think there is a bigger chance for this, okay? But that is just me. If you believe this is a full reversal, you don't have to wait. If you feel comfortable and you have faith in the stock market right now, you can start to buy the dip if you believe it's at the bottom. But for me, I still think this is at the high. Some people said it's buying the dip. I still think it's near all-time high. So everybody has different perspective right now. And I see a big divergence, very big difference in the opinion. So it's up to you how you analyze it, how you see the market. And I think it's also okay to act slowly, like very slowly and carefully, preparing for the worst case scenario. But for me, myself, with the understanding of the macro environment, I won't be surprised to see S&P dropping to this level of 385. That is about 20% of correction, which is what I have been waiting for a while. But also, I could be wrong, we need to respect the market at the end of the day. So if it can really stay back above the 30 weekly MA, I would start to consider it's a reversal. Now, as requested, let's update some of our stocks. For Baby Neo, right now the biggest resistance is around 28. the previous platform of consolidation. A lot of people were trapped above that. So if it can really rebound to that level, it would create a lot of selling pressure. If you do not want to trim Baby Neo, I think it's not a bad idea to open a hedge position, a short position at that level if it gets there, to protect your long positions. And for the short term, if you want to swing trade, the support would be around 21.6 to 22, the gap up on this day. For me, I would be looking closely into the price action of Neo. If I see a reversal, which means it can stay back above this platform with strong volume indicating the buy-in signals from institutions, then I would also add back some of my long-term positions again. For EH, it has been consolidating on this level for a long time, over 2 months period. So I think it's gathering, accumulating momentum. It could be institutions slowly accumulating their shares here. So if the market does not have further black swan, I feel good about EH. Especially, we might be getting the certificate in this quarter or next quarter, the latest. So good things are coming near. So I wouldn't worry too much about EHang. Now for LKCO, it has been slowly dipping until yesterday. It had a strong breakout, increasing at most 50%. But I also said on the Discord that the first resistance is at 74 cents and it had met already. And for now, there's no news that drives this movement. I would treat this as a technical rebound. If the first resistance is pushed through, then the next resistance is about 88 cents. From the look of this 2 days and what I just said about the market for the short term in a couple of days, it does seem like it might keep going for a little bit more. Xiaopeng, on the other hand, might show a little bit more strength than Neo, but just a little bit though. Because the whole EV sector is still quite tiring right now. You can see that from Tesla's share price. Right now, if you want to trade EV, you kind of have to look at Tesla, right? It has broken the trend line, this blue trend line that has been supporting Tesla for more than a year. It has broken 2 weeks ago, and right now we are consolidating, waiting to break out either to the upside or the downside. But I am not personally very optimistic about this. I think it might need to make a new low before. So maybe the EV sector would be entirely driven by Tesla. Right now, Tesla has the biggest resistance around 1,000. So for Xiaopeng, the resistance level would be around 40. Here, it needs to at least close the gap first. Why I say Xiaopeng looks better than Neo is because you can see that for more than a year that the institutions have been accumulating Xiaopeng in this price range between 35 to 45. So average 40, right? So right now, Xiaopeng has not dropped below the institution's cost. So that is a good news. Even though it broke on this day, but only lasted for 2 days. So it's not considered broken. Versus Neo, the institution's cost for the past 1.5 years was between 30 to 40. So right now we have dipped quite below the institutional cost. So it means it would take a much longer time to recover. I saw someone ask me about my views on the solar sector, and this view remains the same. I still stand by this point, is that the solar sector is still a no-brainer for the long term, but right now it's still under the correction. But good news is, after hours, Enphase just reported better than expected earning, so we might have a good boost of the solar sector in a short term. Confirming what I said Monday morning, that when the market just go on sideways, it might create certain growth stock opportunity, especially the ones with the earnings coming up. That would be the trading direction for this week. Now that's it for today, and if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.